Welcome to the Friday Five with Steve Greenfield on CBT News.
Welcome to this week's Friday Five. This is Steve Greenfield from Automotive Ventures, and thanks for joining us. This week, I wanted to dig into the implications of private equity player Brookfield acquiring CDK Global and taking it private. CDK just last week completed its sale to Brookfield in a roughly $8.7 billion transaction. CDK stock is no longer publicly traded. Typically, in these types of deals, the private equity investor tries to minimize the equity check they have to come up with by leveraging the company up with as much debt as possible. So it's less about trying to lay out a plan to double revenue than it is to put as little money down as possible and then use earnings over time to pay down that debt that's taken on to acquire the asset. What is typical is a 5 to 7 year hold period, after which the private equity firm either sells to another PE firm or takes the company back public. Brookfield is no stranger to the automotive retail category. Up until recently, it held Capital Automotive, a provider of real estate financing for auto dealerships, until it sold the company for $3.8 billion in February of this year. After a 3.5-year hiatus, Brian McDonald has returned to CDK Global in his former role as CEO. He replaces Brian Krzanich, who replaced him back in November 2018. McDonald led the company from January 2016 to November 2018. CDK's board of directors, including Krzanich, resigned from their board positions upon completion of the sale. CDK made several other executive changes, including COO Joe Tauges remains with the company as a special advisor to the CEO, but the COO role has been eliminated entirely. Amy Byrne, Chief Human Resources Officer, left her role last week. Amy Smith, previously Vice President of Human Resources for the Sales and Operations Organization, has been named the new Head of Human Resources. CFO Eric Gurin will depart this week, and Vlad Voskin, who is the Vice President of Finance, will serve as interim CFO during a search for a permanent successor. The company announced that there will be additional management changes and likely some refocusing of personnel and assets. Ron Fry, who was CDK's Executive Vice President and Chief Global Strategy Officer from 2017 to 2019, has also returned to the company as part of the new investment team and is on the board of directors, which includes McDonald and members of the Brookfield team. So what implications might dealers feel who are customers of CDK? McDonald says that the company is committed to investing in its technology to help dealerships sell and service vehicles and does not plan to waver in its support of its customers. CDK stock is no longer publicly traded, so CDK's financial information won't be broken out and reported on. Being private should allow CDK to make some long-term investments and not be beholden to the typical quarterly cycle of public companies. The company has reported their focus is going to be on 4 key areas. First, continuing to invest in modernizing their technology. Second, improving the dealer experience by making it easier to do business with CDK. Third, rationalizing their data strategy, leveraging CDK's data assets, including its third-party access program, Fortellis, and its Neuron data management solution. So look for CDK to develop a comprehensive strategy that delivers better value to its dealers and OEM customers. And fourth, it will evaluate and prioritize previous and future investments and acquisitions. There will be pressure to grow revenue and earnings. However, there will be less quarterly pressure than public companies typically feel, and they should have more ability to focus on longer-term strategic initiatives. There are rumors that some of the more recent acquisitions may be put back on the market and divested. In addition, the company has signaled that they will phase out some of their older products, including the cloud-based Drive Flex DMS product, in favor of modernizing their broader DMS platform. It's very likely that they'll look at ways to increase both dealer count and the average spend per dealer per month, both of which could be a challenge given they're already at 9,181 dealers, paying them $9,369 per month, and are much larger than any other software vendor in the auto tech space. A key part of this story is Brookfield's confidence in the dealership model as seen through its $8.7 billion investment. CDK has greatly benefited from the turmoil that Reynolds & Reynolds has gone through recently, with Bob Brockman, who is tied up in court, indicated for potentially evading taxes on $2 billion of income. It's still to be determined what happens to Reynolds once that lawsuit is settled. The dark horse to watch in the DMS race is Tekion, who raised $250 million last October at a valuation of a reported $3.5 billion. They bring a more cloud-based approach that is refreshing to many of the OEMs, some of whom have invested in the company, as well as dealers who have been looking for an alternative to the legacy players for some time. I'll continue to keep my eyes out for new developments in the DMS space and on CDK Global in particular, and report back here on the Friday 5 as further developments emerge. If you have specific thoughts in this area, please shoot me a note. I'd love to discuss with you. So with that, let's transition to our companies to watch. Every week we highlight interesting companies in the automotive technology space to keep an eye on. If you read my monthly industry intel report, I showcase a few companies each month, and we take the opportunity here on the Friday 5 to share some of those companies each week with you. Today, our company to watch is Comply Auto. Comply Auto offers cloud-based software that helps dealerships enhance their compliance capabilities while becoming more efficient and cost-effective. Comply Auto uses data analytics and AI to provide real-time automated compliance decisions, performing tasks that would normally require manually intensive processes and human intelligence. Protect your dealership with the most advanced dealership compliance technology. Forget the forms, binders, spreadsheets, folders, manual audits, and training sessions. Compliance is automatically performed, logged, and demonstrated in one simple platform. The reason that I love Comply Auto is that it's the right product at the right time. Back in October, the Federal Trade Commission revised the Graham-Leach-Bliley Act Safeguards Rule for the first time since the rule was enacted in 2002. Dealers must act immediately to meet compliance with these new rules or otherwise face stiff penalties up to $43,000 per violation. More recently, the FTC signaled interest in further regulation of both F&I products as well as dealership advertising policies. The time is right for solutions like Comply Auto to help dealers understand and anticipate more regulatory changes coming at them. Comply Auto allows the dealer to get back to selling cars. They've modernized compliance through automation so you can worry less and sell more. You can check out Comply Auto at www.complyauto.com. So that's your weekly Friday 5. If you're an auto tech entrepreneur working on a solution that helps car dealerships, we want to hear from you. We are actively investing out of our new dealer fund. If you're a dealer who wants to invest in early stage auto tech companies that benefit your business, let me know. We're still accepting new investors into the fund. Thank you for tuning in to CBT News for this week's Friday 5, and we'll see you next week.
Thanks for joining us for another edition of the Friday 5.